The year 2025 shocked the world when President Donald Trump's administration imposed extremely high tariffs on imported products from China, reaching up to 145%, the highest rate in the history of modern U.S. trade. This move was intended to reduce the trade deficit and force China to make concessions in trade negotiations. However, this action actually led to widespread negative effects. Trade between the United States and China, which previously amounted to nearly $700 billion annually, declined drastically. American companies that relied on components from China faced significantly higher costs, which in turn forced them to raise product prices or scale down operations. The International Monetary Fund, IMF, lowered its global economic growth forecast to 2.8% for 2025, citing these trade tensions as a key factor contributing to the slowdown. Yet, the bigger question that is rarely discussed is, what will happen if the United States truly loses this trade war? Keep watching. Tensions between the United States and China began in 2018 when the Trump administration announced tariffs on Chinese imports worth $34 billion. This move was a response to what the U.S. described as unfair trade practices, currency manipulation, and the theft of intellectual property by China. As a result of this action, China quickly retaliated by imposing tariffs on U.S. goods, including key agricultural products such as soybeans, pork, and other farm produce, placing significant pressure on American farmers. In 2020, the two countries signed a Phase 1 agreement in which China agreed to purchase more U.S. products and implement certain structural economic reforms. However, in reality, the tensions never truly subsided. Issues such as sanctions on Huawei, consulate closures, and technology restrictions continued to worsen relations between the two nations. By 2025, the trade war between the United States and China had entered a more aggressive phase, with triple-digit tariffs, marking an economic conflict the modern world had never seen before. The discussion around the United States losing the trade war is not merely about who wins or loses on tariffs. It involves a significant shift in the U.S.'s economic and geopolitical standing on the global stage. One of the main objectives of the U.S. in launching the trade war against China was to reduce the trade deficit, bring back manufacturing jobs, and slow down China's economic rise. However, according to analysis from the Peterson Institute for International Economics, the trade war failed to achieve those goals. The U.S. trade deficit with China remained high, and the domestic economy also suffered due to trade disruptions. At the same time, China grew stronger in key sectors such as 5G, artificial intelligence, AI, and electric vehicles. Major companies like Huawei and BYD now dominate the global market, leaving their U.S. competitors behind. On the international front, the use of the yuan as an alternative currency to the US dollar is also becoming more widespread, particularly in energy trade. This poses a blow to the dominance of the US dollar, which has long been a cornerstone of America's economic strength. Viewed as a whole, the US's defeat in this trade war is not just about economics. It also reflects a major shift in the global power structure, where China is increasingly becoming the reference point for many developing nations, replacing the United States' long-held position. The U.S. losing the trade war will have a profound impact on its domestic economy, with direct consequences felt by its people and key industries. One of the most notable effects is the loss of jobs in the manufacturing and agricultural sectors. According to a Reuters report, the trade war launched by the United States against China resulted in the loss of approximately 245,000 jobs in the U.S., with the manufacturing sector being among the hardest hit. A study by Oxford Economics conducted for the U.S.-China Business Council revealed that the trade war has had a negative impact on the U.S. domestic economy. Furthermore, many manufacturing plants were forced to scale down operations or relocate to third countries such as Vietnam and Mexico to avoid China's retaliatory tariffs. At the same time, the high tariffs imposed on imported goods caused a surge in costs for U.S. companies and local consumers. According to an analysis by Moody's Analytics, these additional tariffs translated into higher prices for everyday goods, ultimately contributing to a higher inflation rate compared to the period before the trade war began. The impact on investor sentiment was also undeniable. confidence in the stock market began to decline, causing major indexes such as the S&P 500 and Dow Jones to suffer prolonged downturns. International investors also reduced their holdings in U.S. assets, leading to increased volatility in the financial markets. The combination of all these factors shows that the United States' loss in the trade war not only weakened the country's global standing, but also placed a significant burden on its domestic economy and the well-being of its citizens. The United States' defeat in this trade war has not only affected its domestic economy, but also triggered a wave of major global change. Disruptions to global supply chains have raised the costs of raw materials and industrial components, impacting countries that rely heavily on manufacturing exports such as Vietnam, Malaysia, and Bangladesh. Through its Belt and Road Initiative, China expanded its economic network with countries in Southeast Asia, Africa, and Latin America, offering investments and infrastructure projects at a time when the United States was losing its international focus. In addition, the trade war opened the door to significant changes in global geopolitics. This can be seen in China's growing assertiveness in expanding its influence, particularly in the Asia-Pacific, the Middle East, and Africa. Through the Belt and Road Initiative, BRI, China has successfully strengthened strategic ties with many developing nations, offering an alternative to the economic and diplomatic system previously dominated by the United States. In military terms, tensions in the East Asian region have continued to escalate. According to a report by Al Jazeera, China has become more assertive in reinforcing its territorial claims in the South China Sea and increasing pressure on Taiwan, while simultaneously testing the strength of U.S. security commitments in the region. The United States' position as a primary ally is also increasingly being questioned. Countries such as Japan, South Korea, Germany, and even ASEAN nations have begun to balance their relationships between the U.S. and China, in order to avoid becoming overly dependent on a single global power. Even more concerning, this crisis is accelerating the shift toward a multipolar world, a world in which powers like China, Russia, and the global South Bloc hold greater influence in shaping international policies, while traditional American dominance continues to decline. This situation is likely to spark new uncertainties in global security, trade, and diplomacy. In conclusion, if the United States loses this trade war, it is not merely a matter of figures or tariffs. It signifies a major transformation in the global power landscape, where U.S. economic and political dominance is increasingly being challenged. China's rise in the technology sector, its expanding influence through the global South, and the shift toward a multipolar world reflect a new reality that can no longer be ignored. In this new era, countries around the world will have to adapt to a more complex environment, one where reliance on a single superpower is no longer a viable strategy.